Guys, welcome back to the channel. This is Brad. This is the Firefighter's Financial Toolbox. Today we're going to talk about, once again, the best discount brokerage for index investors. And today we're going to talk about Schwab. Is Schwab better than Fidelity? Is Schwab better than Vanguard? And we're going to look at some differences. We're going to talk about the company. We're going to figure out whether or not this is the best place for you to start investing. First of all, what is Charles Schwab? Schwab actually started in 1970 with an investing publication called the Investment Indicator that customers could purchase for an annual fee. In 1975, that actually turned into opening one of the very first discount brokerages where investors could buy securities without paying really heavy commissions that all the big trading houses offered. Charles Schwab is the first discount brokerage to build an online footprint. It is proud to say that it has low cost. Today, Vanguard, Fidelity, and Schwab are the big three of discount brokerages that offer ETFs with increasingly lower fees. Schwab also operates a bank, giving it a unique distinction as one of the world's largest banks and brokerage firms combined. I've done a video, if you haven't seen it, on the Schwab checking account. One of the nice things that offers is you can do ATM withdrawals all over the world without paying any ATM fees, which is kind of nice. So, is Charles Schwab the place for you? All right, first of all, let's talk about some of the pros and cons of their index funds. Okay, the pros. They have really competitive costs, you guys. Schwab index funds have some of the lowest expense ratios in the industry. In fact, many of their ETFs are cheaper than the funds offered through Vanguard or Fidelity. They're highly tradable. What does that mean? When you buy these ETFs, if you are in a small fund, a lot of times it's difficult to sell them when you want. Fortunately, Charles Schwab's index funds don't lack the tradability. In fact, they have 20 ETFs that have over $1 billion in assets, which means if you decide you do want to sell them, there's probably going to be a buyer for you. They also have a strong history. They've been in the industry for almost 50 years, and they have a great reputation as a very customer-oriented business. Schwab rarely makes headlines for the wrong reasons. So what about cons? Of course there's some cons. They do have fewer commission-free ETFs than some of their competitors. Now, Schwab does offer about 200 commission-free ETFs, which is certainly enough for a lot of people to build their portfolio. But it does lag behind the number offered by, say, TD Ameritrade. Another con is some of their actual mutual funds. Now, we're not talking about index funds, but some of their mutual funds are a little bit higher fees. ETFs are preferred to mutual funds at most brokerages, but especially at Charles Schwab, where you'll pay a $50 per trade if you don't choose your mutual fund on the Schwab Mutual Fund 1 source list. So that means if you pick a fund that's not on that list, you're going to have to pay a $50 trade fee for that. So be aware. Some of the qualities of the best Schwab index funds are their low cost, as we talked about, the ample liquidity, and no sales commissions. You guys, in this marketplace, nobody should ever have to sell a commission to buy or sell an ETF. If you do, go somewhere else. If you just opened a brokerage account and want to build a diverse portfolio, these 6 funds are a good place to start. Now, everybody has an individual need for a portfolio. If you have a 401k or other workplace plan, you may have a fund that works for this, and you may not need that. But what you can do is just use to fill a void. For example, if you have an S&P 500 in your workplace plan, maybe you need an international fund. So we're going to talk about some of the different ones here. Now, these are all ETFs, and they're all low-cost ETFs. So their best overall U.S. broad market index fund, that's ticker SCHB. So you guys, this has over 2,500 of America's largest companies in its index. It has a nice, really low expense ratio of 0.03%, which 3 basis points basically means you're going to pay $3 in fees on $10,000. It's very, very low cost. And this fund has over $12 billion in assets. And it says on an average, 1.6 million shares get traded every day. So this is a nice big fund that's easy. Remember, this is going to have most all of your bigger companies in the U.S. So a good one. Now, what if you need a bond fund? The best fixed index fund or bond fund, the Schwab U.S. Aggregate Bond ETF. And that's ticker SCHZ. That tracks the Bloomberg Barclays U.S. Aggregate Bond Index, you guys, which is what most general bond indexes fall. Now, this has a nice low expense ratio too, a little bit lower than even Vanguard's total bond market fund with a lower expense ratio of 0.04%. This is also a big fund, holds about $5 billion in assets, you guys. So pretty good if you need a bond fund. What if you just want a generic large cap or an S&P 500 fund? Because as Warren Buffett says, just buy the S&P, right? Schwab US Large Cap ETF, and that's ticker SCHX. This is large cap stocks, and it moves pretty much in lockstep, as it says, with the S&P 500. But it has an expense ratio of just 0.03%, and it actually holds over 700 of the largest American companies. So instead of just having the top 500, you've actually got a couple hundred extra in there to smooth out the ride or to get you a little bit more exposure to the whole American index, you guys. But what if you have that? Let's say that you have an S&P 500 index in your workplace plan, but you don't have any small caps or the options that you have. A lot of times small cap funds can be very expensive. Schwab US Small Cap ETF, that's ticker SCHA. Small caps historically have better returns over time than larger stocks. Now, one thing we need to talk about before we say that is small cap stocks are much more volatile, you guys, because small companies don't have as much money when things go wrong. So remember that when you see that headline there, that historically have better returns over time. I can tell you personally in the last 10 years, large cap has knocked the pants off of small cap. But I think you should have all sizes of stocks. So with this ETF, with a low expense ratio of 0.05%, which is extremely low for a small cap fund, you guys. It's really hard to beat. It has $7 billion in assets and over 600,000 shares trade daily. So this is a larger fund for a small cap. So this is a good option for people who need some small stock coverage. But what if you need international coverage? Let's talk about the Schwab Developed Market International Equity ETF, ticker SCHF. So what is a developed market? Developed markets are international countries that have had a market in place. These are not your emerging market companies. These are not your little companies. These are big, established international companies. The Schwab International Equity ETF is perfect for investors looking for exposure to developed markets. Now, I can tell you I hold the Vanguard Total International Stock Market, and it cost me 11 basis points. With this fund, you can hold the Schwab ETF for 0.06% or 6 basis points, you guys. That is actually better than most competing funds on the market. By keeping your fees low, you're going to do better over the long run. Now, this is one that holds almost 1,500 stocks, you guys. And you've got Japan, the UK, most countries in Europe, Canada, as well as your Pacific Rim companies, Australia, Eastern Asia, and the likes. So a good developed market index if you need some large international. Now, we know international lately has not been a darling. It's been underperforming. But we have to remember that the stock market goes in cycles. So even though the United States has been on a tear for 10 or 11 years, doesn't mean it will going forward. So last one we're going to talk about is the Schwab Emerging Markets Equity ETF. That's ticker SCHE. Now, as we know, first of all, emerging stocks are very risky stocks, you guys. These are small countries with smaller companies that are trying to get on the board. Now, obviously, they have a lot of upside when they're on, but they also have a lot of downside. So if you invest in this fund, be ready for it to be very volatile and not be a steady ride. Now, this is a very inexpensive fund with an expense ratio of 0.13%, or just 13 basis points. It's the highest costing fund on the list, but if you look at other emerging market funds, you guys, this is actually a really good price. The fund tracks the FTSE Emerging Market Index with a heavy focus on China and India. South Korea, in this fund, they do not consider South Korea as an emerging market, so that may be something to think about if you are considering it as an option. Now, you guys, I'm not saying you need to have all 6 of these funds. These are just 6 examples, low-cost examples of Schwab. So let's talk about my final thoughts here. Schwab has certainly turned up the heat on Vanguard by dropping fund expenses to the lowest in the industry. Personally, you guys know I'm a Vanguard lover, and I have most of my funds through Vanguard. But I can tell you, at the time that I got involved with Vanguard, they were leading. And recently, both Charles Schwab and Fidelity have really come on board with some low-cost options to make it a big battle zone for who is the cheapest. Schwab account holders that hold can also trade these ETFs commission-free, which we talked about. If you're looking for a new discount brokerage or a bank with access to cheap index funds, Charles Schwab is one of the most appealing options. I completely agree with that, you guys. And if I was starting out today, I would certainly give a lot of heed to the fact that Charles Schwab, not only can it handle my brokerage for my Roth or my taxable account if I like, but I can also have the option of having a interest-bearing checking account that when I draw money out overseas doesn't charge me a fund. Just another video I wanted to do to talk about whether or not Schwab was the best. Is Vanguard the best? Is Fidelity the best? It boils down to personal choices. I just like to inform people on different options. So I hope you guys got something out of this. If you did, do me a favor, give me a thumbs up. If you're new to the channel, you're not already subscribed, you guys, hit that red subscribe button, ring the bell, you'll get notified every time I make a video. I try to make 2 a week, and we'll see you again. All right, thanks a lot.